ladies and gentlemen, thank you so much for joining us in another week of our weekly real estate shows. My name is Angela Olmos. If we haven't properly met yet, I'm a full-time realtor in the Northeast Florida area. And I'm here with my co-host, Delayne Bravo with Fiverr Mortgage. How you doing, Delaney?
I am good. My daughter has an ear infection, so is homesick with me. So I'm doing this from the house. So if you hear screams or we have a little guest, then that's why. But I'm doing good. How are you?
I'm good. Just like you, just juggling with kids being off from school, just work and, just the usual. So I also appreciate our guest understanding. We have lives for people just like you. But our expertise have to do with buying, selling, and investing in real estate. And that's why we wanted to create these videos to share with you guys some of the knowledge, the tips, the expertise that we have, and make this available to you. So if you're thinking of buying, selling, or investing, then you can reach out to us.
Yes.
And today, I wanted to just kind of start off by talking about something that we've seen a lot happening recently, and that is how remote work expands your home buying horizons. We sometimes take this for granted, but the ability to work from home now gives you so many more options when it comes to like which house you could live in or you would want to live in. Traditionally, if you had to be close to work, that would only limit you to certain locations or certain neighborhoods, where now with a work from home environment, you could have a lot more flexibility. So, I will be posting the link to my blog here so you guys can read more about it. But obviously, even as some companies transition back to home office, remote work remains popular. And we're seeing a lot of people do this where they work from home all the time. And then sometimes it's like 50% of the time. So the whole idea is that more work flexibility equals more home options. And that paired with, just having more resources and more options, that just sets you up in a much more advantageous situation. And that's what I think would be worth highlighting today. So if you are working from home and you have been thinking about, buying a home, now you have so many more options to look for. And really, truly, the bottom line is that working remotely only gives you more flexibility to your job. Not only gives you more flexibility to your job, but also presents a great chance for broadening your search for a home. And since you're not limited to a specific location, you can now have the opportunity to explore more options. So let's get in touch and take a look at what you are able to qualify for, what you're looking to buy. And I also have some freebies here that you can download on my blog. Things to consider when buying a home. Super easy. You just put in the information. It's an automatic download. And then if there's any questions that you might have, you can always reach out to me. But I really just wanted to highlight the benefit of working from home and how that is going to give you a lot more options when it comes to home ownership.
Well, and one thing I'll add is I can tell you especially since COVID and the pandemic, the amount of work from home we all know has skyrocketed. And that is something with here in Northeast Florida, because we have amazing school zones, we have amazing weather, we have all of these, businesses booming. So many people are moving here. I can tell you that I would say 35 to 40% of the buyers I work with, at least one of them works remote. And I would say about half of those, they're moving from out of state. So people are moving here, and it does give a lot of flexibility, a lot more choices, because you can kind of work from wherever you want.
Yes. And, this kind of ties into something that's been really popular these days, and that's the Hometown Heroes down payment assistance that you offer. It reminded me that as long as you are connected to a Florida-based company, right? You could be working from home, but as long as you're connected to a Florida-based employer, then you could qualify for those funds. Isn't that right?
Yep. So as long as you're working, you can work remotely, but as long as there's a brick and mortar location in Florida, or if you're self-employed, if you're working for a small company, as long as we can show that it was licensed and established in Florida. So if you have a job for somebody out in California, you're working remote, if they have no affiliation with Florida, then we wouldn't be able to use that. But yeah, you can definitely use it. And I have a couple remote people using it right now.
That's amazing. That's really, really cool. So the way that you would want to find out if you are eligible for any of those funds is to get pre-qualified. And Delaney offers that as a free option. And, it's really just something that you really have to give yourself the opportunity to get. And you just connect with her, and then you fill out your application, and then she can tell you if you qualify for those funds and give you a pre-approval, which is truly the first step when it comes to buying a home. You really want to get pre-approved for your mortgage if you're using financing. And then once we have that, then we can move on to the second step, which will be selecting the homes that you would want to buy and then begin negotiating with offers on those. But yeah, truly the first step is always a pre-approval.
Yes.
All right. So that's what I had for you guys today.
Let me go over here. So I got something kind of fun. I'm going to give a really quick rundown of the different types of PMI. I've been getting this question quite often. So I have a little thing that I put together, and I actually just did a post on this on my Instagram and on my Facebook. So feel free to see it there. I'm just going to go through the highlights, but you can look me up, Jack's Mortgage Mama, everywhere, and I'll hopefully pop up for you. So when people are talking about PMI, private mortgage insurance, I'm going to answer a few quick questions. First is, what is it? Private mortgage insurance, or PMI, is an insurance that you're paying for the lenders that basically would cover some of the lender's losses if you were to default on your mortgage. So this is included in any conventional loan less than 20% down. So if you do not put 20% down, you will have PMI in some form. On FHA and USDA, it is a flat calculation. It doesn't matter what your credit score is, nothing like that. On conventional, it's risk-based, meaning that your amount of PMI will be unique to your loan based off of how much you're putting down, your debt ratio, how many buyers are on the file, so on and so forth. So when I say you will have PMI in some form, what exactly do I mean? There are 3 ways that you can have PMI for a conventional loan. On FHA and USDA, so any government programs, it is required monthly for the life of the loan. On conventional, it falls off after 10 years. So you would pay it for the first 10 years, and then it will fall off for you. But where are the different types of ways? And I'm pulling down my little cheat sheet. What are the different ways that you can have PMI? So the first is monthly, which it would be monthly added into your monthly payment. And that would be for the first 10 years of the loan. So I did a pricing scenario just to give you guys some real figures. And because I have to legally disclose how I price this, it would be based off of a $400,000 home with 10% down. It's a primary residence. It's 740 plus credit, and there's 2 buyers. So, let's just say husband, wife buying a home, 10% down, buying a $400,000 home. Your monthly PMI would be $39 a month.
And that's putting how much down, Delaney?
10%.
Oh, that's not bad. You said $39 a month. That's it?
$39 a month. Now, here's one thing to keep in mind. If you do this, by the time it falls off at year 11, because you have to have it for the first 10 years, then you would have spent $4,680 in PMI solely, right? Because you're paying it every month. So who is this best for? This is best for those who are cash to close sensitive, but don't mind a slightly higher, payment. $39, that's one trip to, McDonald's or for the family or whatever. So, and obviously putting 20% down to avoid this is a lot more than just doing the $39 a month. So that's the monthly version. Here's where it gets interesting. You have something called single premium PMI, which means you can pay it off at closing in one lump sum. So they say, okay, you're less than 20% down, but show us you got some skin in the game and pay this PMI up front, and we won't ever have it in your monthly payment. So
I've seen that, and that makes their payment lower, right? Because they're essentially paying it up front.
Yes. And the really cool thing about it is same scenario, $400,000 house, husband, wife buying it, perfect credit, yada, yada. The amount to pay this up front would be $2,700.
Oh, so there's a discount for paying it up front.
Yes, they give you, think about Costco, they give you a bulk discount, and they give you a discount because you're saying, I'm less likely to default on my mortgage because I'm giving you more money up front to show you that I won't. I guess statistically there's less risk if you're paying more up front and all that behind the scenes. But so who does this work best for? Because you would be saving $2,000 if you went this route, right?
Right.
But you have to think, how long am I going to be in this house? Because $39 a month times 2 years, that's $40 a month times 24, you're really not that close to paying it. So there's a lot of factors there, but this is where I come in. So where I come in is, what is your goal? How are we going to get you there? Are you more sensitive on your payment, on your cash to close? So I work on all of that, but that's really the two main ones. The last one is lender paid PMI. It is not common, specifically in this market. That option is where you would take a slightly higher rate versus having it monthly. So the lender pays for it, but in exchange, you have a slightly higher rate for that. So if we did that option, the increase in your interest rate would be an increase in payment of $89 a month. So that doesn't necessarily make sense if you can just do it monthly for $39 a month. So it worked a lot more in pre-pandemic market, but right now with how the compression is and all of the nerdy stuff I look up, it just doesn't make sense. So that's really the difference between monthly, single, and lender PMI. And a lot of people don't even know these are options. So just to break it down really quick for what they are.
I love that. Yeah. And I think it's important to understand that there are options even within the PMI. It's not like a one size fits all. I see a lot of buyers, especially first time home buyers, that might say, well, my mom bought a house, I don't know, 5-6 years ago, and her PMI was $300. So it must be $300 for me now. And it really isn't. It's based off the loan amount and the risk that the lender is having for giving you the loan. Is that right?
Yep. Everything's risk-based. So you could have two people and one person, same exact house, same exact scenario. But if one person has a 620 credit and the next buyer has a 780 credit, that all depends on your PMI because they're looking at it from a risk lens on, how likely statistically is this person to default on their mortgage? So same thing, you could have two people, one person, same credit score, one person putting 5% down, one person putting 15. That PMI is going to differ. So it's really great to get with a lender, run your options, and they can give you an exact on what that PMI is going to be.
Totally. Yeah. And it would make sense now that I think about it, because if you're putting more money down, it shows the bank that you have more skin in the game. You have a lot more equity already, that you're committed to on that investment. So you're less likely to walk away from it, as opposed to someone that might perhaps have gotten 100% financing with no closing costs. I would think that it would be easier for that person to walk away from it compared to someone that may have put 15% down, from that. So that totally makes sense. But truly the best thing to do is to get with Delayne and have her recommend the right program for you. Because there may be a lot of other things that we haven't even considered, like your credit score or, who else might be on the loan that could possibly, have an effect on that.
Yes. And before I get into the weekend fun stuff we have, really quick note, VA loans, I didn't mention, they have no PMI. So that is a benefit that veterans, active duty, and surviving spouses do get, is they get 0% down and no PMI on their loans because they are backed by the VA. So really awesome little perk there. And I'm a VA loan nerd. So if you ever want to look into that, let me know.
It's like one of the best loans to get, which is reserved for the military because they they were entitled for that, for having served their country. We have a VA loan on our home, and it was really like the best plan for us because like you said, there is no mortgage insurance. Our rates generally more favorable for VA than they would be for other plans.
Yes, most of the time, like right now, VA is slightly lower than FHA, which is slightly lower than conventional. So there's just a lot of factors with that. But yep, VA is typically right on par or even a little bit lower, which right now it is a little lower.
Nice, nice. So if you are a military borrower, I think either active and also inactive, right? You could do VA financing even if you are not actively engaged, but you have served, right?
Correct. It's active duty veterans, National Guard, reservists, and then also surviving spouses. So even if I haven't served long enough, I don't know. I can pull a certificate from the VA to see what you have entitlement wise I'm happy just to do that for anyone. So feel free to reach out to me if you do think that might be an option that would work for you.
Sure. And you mentioned something truly, truly important that I think is a key piece that not everyone knows. Everyone thinks that because they served in the military themselves, then they're eligible for a VA loan, which is correct. But also the surviving spouse. That's the piece that you just mentioned that I don't think everybody knows. So if you happen to be a surviving spouse for someone that had access to a VA loan, that could possibly make you eligible to receive that type of financing that he or she would have been awarded for. So please get with Delayne to figure out if that's something you can benefit from.
Yes. Super cool. I've done a couple for that scenario, and it's really rewarding because a lot of times the spouse is overwhelmed, lost. They never really worked directly with the VA. Like it was always their spouse that did all this paperwork and was in service. So helping them through that and them realizing, oh my gosh, I can buy with no money down is a really cool experience. But for this weekend, I picked out 3 really quick things. There is not a ton happening this weekend. I feel like people are like, it's going to be great outside. Let's do beach or pool. But Darius Rucker, country singer, he is coming to Daly's Place, which we talked about many times. It's a stadium right next to the Jags Stadium downtown Jacksonville. It's a newer venue. It's really, really cool. Amphitheater kind of feel out there. So it's July 20th on Thursday. And it is, cut me off at the bottom, but the admission is $19 to $89. So in terms of a concert, it really is not insane, even if you were to get top tier tickets. And that's really what we're going with. So it's in the evening. I believe the gates open at 6. So it should be a fun time. Are you a country fan?
Certain ones I like, but not all of them.
Same. I'm like, I'll pick and choose. Perfect. And then this is called the Sip and Stroll by PNC. So it's the 3rd Thursday of every month. You have live music, food vendors, bars, picnic areas, cocktails, all sorts of fun stuff. It is at the South Bank Riverwalk Hotel. And it is the 3rd Thursday from 5 to 8 p.m. So just a fun little thing to go out and have fun with the family, a date night, and just do something a little bit different. I love that name too, Sip and Stroll.
Sip and Stroll. Yeah, we can all be excited about that.
Yes. It sounds like a little fun night to do. And then the last one is the North Beaches Art Walk. So I love the Riverside or the downtown Jacksonville Art Walk, but this is just a little different one. It's the 3rd Thursday of every month, 5 to 9. It has local artists, live performances, food vendors, yada, yada. So something fun to walk around. So it's going to be Thursday, 5 to 9, just something kind of fun. And let me see if I can see exactly where it's in the Beaches Town Center where Atlantic Boulevard meets the ocean.
Okay.
So really fun, hit the beach, come here afterwards, take the kiddos. I think it would be fun. So those are my 3 things.
That sounds amazing. That gives everyone great plans for the weekend. And the weather's supposed to be nice too, I hear. So hopefully we'll have a lot of fun in the sun this weekend.
Yes.
All right, guys. So that's our show for today. I hope that you find this information helpful. Like we said, if there's anything that we could do for you throughout the weekend, if you just happen to be driving through town and you're like, oh, that house looks like one that would want to buy, then get with us, guys. It's really, truly, it's something that, first of all, it's free to you. Should we remind them of that? To get pre-qualified is absolutely free.
Free 99.
Zero. Free 99. Truly, all that you have to do is fill out your application and know if you qualify for a mortgage. And you're going to be so much better off than just not knowing. It's crazy to think of how many people would want to do this, but are kind of like afraid of taking the first step, or maybe just don't have the resources or don't really know where to go or how it is done. Let's eliminate all of that and let's get you into home ownership if that's right for you. And the only way to really do that is to start the process, and it's free $99.
Free $99, and I have a soft pull option, which is very, very pretty rare in the mortgage world. So I can do a full soft pull of your credit, will not hit your credit score, don't have to worry about an additional inquiry. And it gives me the ability to see the credit report and do almost everything I can do with a normal credit report. Couple instances where I would highly recommend for a full report, but just to take a look and see, there's zero risk, there's zero cost. So would love to help y'all.
Absolutely. And then once you have that pre-approval, I'll help you buy the house. So let's connect, guys. I hope everyone has a wonderful weekend. Please do share this information with anyone that you know, because you just never know. They might be thinking of buying and selling. And I will say you would want them to be well taken care of. And we're here for that. So until next time, remember to be kind to one another. And we'll see you guys on next week's video. Take care. Bye. You get my official send off? Okay, here we go.